Here we are on the $yen-5 range, and we have a flag pattern that is set up, and this was a pattern I was going to get in this morning. However, due to the way that it's formed and as being close to structure highs, I've really waited for confirmation on this currency pair. I will in a moment do the higher time frame analysis, but what I want to do just now is just talk you through why I've waited. And this morning when I looked at this, we were here at this level, so I did have just more than a 1-to-1 risk to reward, but I wanted to wait for more confirmation. And what I saw was that when we was here, we'd already made a rally up, a pullback, and we were going up again, and we could have been putting in an AB equals CD pattern, as you can now see here, and we've just completed the D point, and I'm hoping that we're going to get a retracement. Here you can see we have a fib on from our swing low to our swing high, and with this AB equals CD pattern, we typically, if it goes on to win, we typically see a retracement into the 382. Very often we can see a retracement into the 618. Now, I had a couple of concerns. One was the targets that we could get, and one was the fact that we had not tested this very large trend line here. And it does look like we have here on the 5 range, but when I take you through the high time frame analysis, you'll get to see that we actually haven't. So what I'm going to do is let me delete everything off, and I'm going to go out to the daily time frame, and I want to run through what my concern is and why I've waited for extra confirmation on this currency pair. So for a long time here we've been in consolidation, but what we have done is we have now broken away from this level. If I put a structure line just on here on the dailies, you can see we have almost tested the candle, the body closes, and I'm expecting that we are going to go a little bit higher than that, and we're going to come up and test the 113 flat. As we know, psychological numbers act like magnets, just as major structure does. It tends to be drawn there. Now here on the 240 time frame, this was my concern here. We had been respecting this trend line very, very well, and at some point all structure and trend lines is inevitably broken and we no longer test it. However, we have tested here, 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 this was last week, but we have not yet come down and retested this level, and that's a bit of a concern for me. And so as we drop down then to the 60-minute time frame, we can see that we actually had a momentum move here. This was actually a flag pattern on the 15-minute time frame, which came into this structure level here. So you can see right here we have a crossover where we have our rising channel and we have our horizontal structure, and that had been tested there, here, here, and then as we go to the 5 range, now bear in mind the 5 range does always look different to your normal candlestick charts. This is the pattern I was looking at. We had a move higher, we had a move to here, and then we have had, in fact, I'm just going to make these a different colour just so that they stand out a little bit better. I'm going to make these green just so we can see them. And you know, sometimes trading is just about building more confirmation. It's about having a good reason for entering the trade when there is some doubt as to maybe where we will go to, maybe the entry reason, maybe there's a major structure line that you're still waiting for another test of. And in this scenario, I just wanted to wait for more confirmation. Okay, so we had this nice move higher, we had this structure level here that I was paying close attention to. I'm going to make this box where we had the crossover red. Okay, I'm going to throw on a fib, and you guys know that I have fibs that I pay attention to depending where structure is, even handled numbers, how many touches of the flag we've had, whether we're in a strong trend or whether we're not, whether we're in trend or we're just in a violation stage. Okay, so you can see we've hit the 382, the 50, we haven't yet hit the 618, so we've had a test there, here, there, so that's 2 tests, 3 on the top, 2 on the bottom, and then just here we've had 3 on the bottom, and then we have now had our AB equals CD pattern, which you can clearly see we've now just hit, and I'm looking for that pullback, and on this AB equals CD pattern I'm going to want either the, well, I'm holding for the 618. I would like for price to come back down to the 618. It then gives me a good risk to reward. I've already had confirmation that we've broken out of the channel. I'm just going to make that 618 a different colour and make it something high vis that I can see. There we go, there's the 618. And so I'm waiting for the market to come into this red box here because it's the crossover of the two channels. It is close to the 618 fib. It allows my stop to go under that structure level and under this one as well, and so I should be able to get a risk of around this much. I think we could come a little lower to the 112.50 psychological number, and a potential reward of, now I'm going to go a couple of pips below the even handled number. It does mean that I am just playing for a bit of a breakout above the flag pattern, but what I'm going to do is I'm actually going to do this in 2 stages. So I'll actually have 2 targets, sorry. So I'm going to have target 1 here. I'm going to make this green, and I'm going to have secondary targets up here. But what I'm going to do in this instance is just wait to see if we actually get a clean break above that level, or whether or not we're going to struggle to pass it. And if we struggle, I'm going to exit my entire position. But if we don't, and we do get that push higher, I get my expected targets while banking some of the profit there. So they're my concerns on this trade, and this is the reason why I've waited for the breakout. I'm going to be waiting for the pullback into the 618 fib with nice stops, offering me probably a 2-to-1 here to target 1s and a little bit more to target 2. But obviously bearing in mind all the time that we're holding for the 113 to act like a magnet, and we're just hoping for a bit of a break of that higher structure level, and if we don't, well then I'll exit the position. So we'll come back and see if I can get filled this trade. And we're back, and I've just got my entry now on this flag pattern here on the 5 range. What I'm going to do is I'm just going to clear up some of these fibs so that we can see this a little better. We can see now that we have actually come in fact, just let me remove the orders. There we go. We've actually come into that 618, and I told you I was looking at the structure level and this one, and what I've done is I've actually got my stops below the main structure level because of the risk to reward was there, and of course that's where I wanted stops anyway. So if I bring back on the orders, then let me get rid of this fib now, and we can see that we have here a risk now of 20 pips. Our reward to target 1s is 34, so we have just over a 1.5 to 1 here, and a little bit more there to target 2s. If I do go to the 60-minute time frame, you're going to see a couple of things. Remove the VS1 levels. Okay, you're going to see that target 1s up here at a retest of the candle closes minus a couple of pips, and target 2s are, as we discussed, a couple of pips below that even handled number. And what I am noticing here is that we broke out the channel and we had a bounce off this channel, and what we've done now is spike down to it. What we haven't done is actually spike down to this bigger trend line here, and that is certainly a possibility. What I don't want to do is end up missing the move. Now at this level, at the 618 fib, where we have this internal level of structure, we also have this trend line and the psychological number, and I have a risk reward here of 1 to 1.5, and this is quite a good opportunity to get involved in the trade. Obviously, if price comes down to this level and we could have got another 5 or 6 pips out of it, well then that's obviously better. But you don't want to miss the move by trying to penny pinch a few pips here and there. It isn't a great deal of pips, and it allows me to get in with a very good risk to reward at a very good area. And obviously when it comes to trading, we don't play to the pip, we play ranges, and we just need to make sure that the range that we have to allow room for the trade to breathe is big enough, our stop is in an appropriate place, and we have realistic targets, a realistic expectation of targets there. And then we just have to leave the trade to allow it to breathe, because you'll never get involved in a trade, well, very rarely you'll get involved in a trade where you get it, you know, down to the few pips, or you know, within 10 pips. It's very difficult to do that, unless you're scalping, of course. But well, we're in this trade now. We'll come back and see whether or not this is going to be a winner or a loser. And we're back for a little update on this trade, and once again we have now broken out of this trend line for the second time. You can see that we're 13-14 pips up at the moment. We came down nicely into that 618. You can see there, went a little bit past it down to the 886, but if we actually go to the 60-minute time frame, you'll actually see that we've come down and retested that trend line, this rising trend line I was talking about. And there is the red candle, there is the long wick, and as you can see, it actually came down to test that trend line. And obviously all the way through this trade, this was my concern. So we're breaking out of the channel again. We'll come back and see if we can just rallying up now to targets for plus 34. We're back for an update, and we've now broken out the channel and made a new high above this high just here. And so what I've done now is, because we've broken out the channel and we've made a new high, and we've tested that trend line that I was expecting to test, I've reduced down the risk on this trade. So the stop is still below the lows here, but I'm underneath it, and so the risk now is 14 pips. And we're back. We're currently 28 pips up. We have been a little bit higher, so we've come within 3 or 4 pips now of target. So what I've just done is I've moved the stop to just a couple of pips below break even. And what I'm going to have to do, because it's quite late now, the time is nearly 9:35 in the evening, this was a trade that I said I would have to manage for secondary targets, because I don't have the greatest of confidence that we can get up there. And I think you'll remember for you just a few seconds ago, I was saying that I would have to manage the trade and see if we got a higher high, higher close. Well, it's fast approaching my bedtime, and I have no interest in staying up for hours to monitor this second trade. That will simply just affect me emotionally and psychologically, and I'll just be tired for the trading tomorrow and potentially make mistakes. So I have no interest in doing that. So what I'm just going to do is I am going to move that to there so that we can take the whole of the position off at target ones. And yeah, so in this instance, that's what I've got to do when I don't have a greater than a 50% bias that we're going to get secondary targets. There's no point in just hoping. So there we go, and we'll come back and see if this hits in the morning. Well, I'm back. That only took 6 minutes. The time is 9:41. My alarm's just gone off. We've just gone and hit target, so plus 34 pips. As usual, if you love the content that I produce within these videos and the way that I am able to explain the underwriting process and how I use a high time frame analysis to determine where to enter, where to take targets, where to put stops, do me a favor, give me a like, share it, or subscribe if you have not yet subscribed.